Wow, this feels amazing. First of all, yeah, thanks everybody for coming, and massive thanks for Claire for inviting us and having us speak about something we are extremely passionate about, which is fundraising, and which we do on a daily basis. Now, before I actually do anything, I'm going to take a selfie. This is pretty cool. I don't speak at Oxford every day. Smile, everybody. Cool. Okay. Awesome. Yeah. Thanks for having us. Maybe before we kick it off, it would be really great for us to see a little bit who's in the audience. Do we have? Can I see a quick show of hands? Do we have any existing entrepreneurs in the room? Oh wow, that's quite a lot. Cool. And who wants to be an entrepreneur or start his own company in the short term? Awesome. That's the perfect audience. So the ones who want to become an entrepreneur or start a business, definitely talk to us after the presentation. Now, before we go, right into the materials of fundraising, maybe it makes sense we quickly introduce ourselves. Sia, do you want to kick it off?
Sure. Thanks, Rick. So I grew up in Switzerland, actually. It's now 2 years that I'm working with Seedcamp. I'm a portfolio analyst at Seedcamp. So mostly working as part of the investment team, and then post-investment, really tracking the progress of our portfolio of close to 200 companies. My background, I guess, having grown up in Switzerland, was in the financial services. I studied in Spain at ESADE in Barcelona, sunny Barcelona, which was also a really good time there. And now working with Rick also to support our companies around the fundraising.
Cool. And I'm the chap here on my right side. I joined Seedcamp about 1.5 years ago. Before that, I worked in several startups, mainly on the CFO kind of position. Worked at Merrill Lynch as well, in the investment banking side, and I worked at a family office as an investment manager. And within Seedcamp, together with Sia, I look mainly after helping our companies raise funding. Also do everything M&A related, and also do our US outreach, so where we go to the US with our founders twice a year to help them pitch. Now, just a very quick word on Seedcamp. Claire kindly introduced us before, but we are really involved from an accelerator into more of a fund. We invest pre-seed and seed up to 200,000 euros, and we support our founders with what we call a lifelong kind of platform support structured around network, structured around capital and learning. And so we're not like a 3-month program where we say goodbye, but we try to stay, with the life of the company as their kind of trusted partner. We've invested since 2007 in almost now, as Sia mentioned, 200 companies. So we are very, very active. I think in the last 12 months we invested in almost 70 companies alone. And one thing we think our companies are extremely good at is actually raising money. So the ratio you see here on the left, the 91%, that's the percentage of our companies that have managed to raise follow-on funding after joining Seedcamp. And what's even more important is that they raised from good investors, or we call it smart money. So you see a couple of logos here. So some of the funds that some of our companies, raised from the Andreessens and the Lake Stars and the Valors, and so that's obviously extremely important. And raising money, and we'll get into that in a bit. Raising money is obviously not a guarantor for success, but raising money helps when you're trying to build, best-in-class products, when you're trying to hire really good people, and so it's in a way an indicator of success. Now, quickly on the agenda, we're speaking a little bit about fundraising in general. I'm going to talk about some of the key considerations when it comes to raising money, and then Sia is going to talk about the classic timeline of the fundraising process, and last but not least, a little bit an overview of what we see in Europe currently happening, so the current fundraising environment. And then we want to keep like maybe 15-20 minutes for Q&A. If during the presentation, by all means, interrupt us, ask questions, scream if you disagree. We're happy to make this as interactive as possible. Cool. So, fundraising. Why why do you actually need fundraising? And it's, yeah, that question always comes up, and it really boils down to a fundamental decision that you take at the beginning of your company. Do you want to stay independent, or do you want to grow as fast as possible? And in an ideal world, a company generates revenue and grows organically with the cash flows it generates. Now, what outside money helps you do is scale a lot faster and grow a lot quicker than you could do without external money. And so obviously the downside of that is that you lose some of your freedom and you'll not be independent anymore. But bearing in mind that, you know, while you develop an idea or a business, there's probably 30 or 40 other companies doing exactly the same at the moment. And so funding can help you grow a lot faster and can sometimes be the decisive factor when it comes to, you know, being better than competition. There's different kind of investors or different kind of sources of funding for different stages of your company. Yeah, go for it.
What is bootstrapping again? Sorry?
So bootstrapping is just a term you'd use for growing a business without taking external money. So, you know, you do it on your own. Is that roughly? I don't know where the term comes from, but yeah, it really means, you know, growing without taking external funds.
It means pulling yourself up with your bootstraps. So your laces. That's what it means.
Perfect. Good we have native English speakers here. Cool. So yeah, a bit about different types of funding. Typically, when you're raising less than £250,000, you'd see friends and family or angel investors or crowdfunding platforms come in as the sources of funding, and then above that it's typically institutional money or VC money that helps you with the funding. And I don't know, CF, we're going to speak a little bit about SES later, but what you've seen obviously in the UK is with SEIS, which is the Seed Enterprise Investment Scheme, which helps angel investors deduct some of their investment from their tax base. So it's been a tax relief scheme by the UK government, helped a lot of angel investors pour money into startups. So typically at that first kind of stage of a company, you would see different kind of investors. And throughout the next, say half an hour, we want to mainly talk about that upper party, which is the institutional money, or how do you go about raising from a VC. Now, what kind of benefits are there from actually taking money from a VC? And I've listed here one of the four that really came first to mind, and it is actually a lot more. The first one I would point out is discipline. It helps to have someone on your board that you need to report to, and you need to justify why you're spending X amount of money on your product and zero on marketing, or vice versa. So it's really about cash discipline would be the first point. The other one is, a lot of VCs bring operational expertise, or they've seen several companies in the stage that you're at. So it's about having someone on your side that can help you with the scaling of your business. You'll get access to the network of a VC, introductions to other VCs when you raise more money, or introductions to potential customers or partners, and really that broader network that larger VC firms bring with them. And then last but not least, something we see increasingly actually coming out of the US a lot, that the overall platform, Andreessen Horowitz started with that a couple of years ago, where you have a large base or large platform of support, where you help your portfolio companies with subsectors like marketing or UX or PR, and you have entrepreneurs in residence that support the portfolio companies on each of those areas. And actually we adopted a little bit that that same scheme at SeedCamp, and that can often make the difference when you can call someone up and say, oh, how should I price my product? Well, if there's someone that's done it 50 times before, then that can generally help a lot. A little bit about key considerations on fundraising. I think that's quite a good picture on how difficult it sometimes is. I think fundraising, and it's a very general comment, but I'm going to elaborate on that. Fundraising starts now, and it's really, what I mean by that is it's really about going out and building relationships as early on as possible, and building, and expanding your network. The good founders at SeedCamp, whenever I'm going to a networking event, I'll see them somewhere. The really good ones with a glass of water in their hand, the other ones with a beer. But that aside, they're out there, they're talking to people, and they know people when they need to ask for a favor, like, can you make an introduction to so-and-so? So it's not about constantly pitching your business, but it's about building relationships. And actually, whenever I'm in the US, I'm really, really surprised how good the folks out in the Silicon Valley are, because building big businesses, it's actually not about sitting in your basement and just coding, but it's about bringing people together, getting to know co-founders, talking to VCs at events, and so that relationship building is super important. And so that's what we mean here with you should be actively out there and talking to people. Now, at some point, you'll have to do a bit of research on who are the relevant VCs for your business. And yeah, of course, there's different criteria on how you select those VCs, and we listed a couple. So at what stage do the funds invest? Are they like a Series A or Series B or more growth type investor? Or do they invest more around the seed stage? In what geography do they invest? Very importantly, obviously, in what sector? So is it a B2B? Or more like a SaaS type of investor, or do they like consumer businesses? So you have to do your research, and when you're out there talking to people, you should ideally know who are the big funds and what are their kind of preferences. What we advise our founders to do from that very first day on is track your communication, because you'll see there's a couple of hundred different angels and VCs out there that you'll interact with, and you'll lose overview of who you're talking to at what point, and really look at it as almost like a sales funnel where you narrow down those VCs or those angels that are ultimately relevant for you, and when you're out fundraising, who you should maybe do a follow-up with or who you're already talking to, and so building that spreadsheet is, do that as early as possible, and it can help you further down in the process. Storytelling is key. Oh, I love this. Yeah, this is, it's easier said than done, but once you are in front of the VC, or once you have the partner pitch, or once you really pitching your business, there's a couple of advices we generally give, and we see a lot of mistakes being done on that end. And I think the first thing I'd say is boil it down to what's essential. When I get a pitch, or when I pitch someone, I'll need to make sure that person, when he's doing a cocktail reception later in the evening, or 6 hours later, needs to make sure that this person can really repeat the idea that I pitched to him. I met this morning a founder. He wants to build drones that cleans windows in skyscrapers. Boom. Very easy. Make sure it boils down to that 140 character sentence where the people will remember what you're actually doing. That's kind of the first thing, because we're all passionate about what we do, and it's very easy, especially for technical founders, to go into too much detail, and then at the end of the day, the VC or you pitch to, he's getting lost with all the details around where you met your co-founder and why you're building that technical solution. I mean, really boil it down to what's in a quintessence, what is it that you're building? And the second thing is, what again I think in the US founders are very, very good, is look at it from a customer-centric perspective. Why do people care? I mean, what is it that I'm building that customers really, really want? Why would they swap from the current solution to what I'm building? We sometimes put a metrics on that. We say, you know, if whatever I'm building is not at least 10 times better than what's already out there, no one's going to care about, no one's going to move to your new solution. So when you pitch, make sure you really, really put that customer-centric view first, and you say, look, I'm building something every customer will want. And actually in the US, which is one of the few countries in the world, you can raise money purely by convincing VCs that you're building something new and that you're building something that every single customer will want to have. So make sure you embed that very early on. A couple other things on storytelling. By the way, there's a great blog post out which I'm happy to share from one of the Seedcamp partners that talks about storytelling. Make sure that you're really engaged in what you present. Make sure you boil down to the essentials, and a good the audience needs to really, really take value add out of your story. And a good test of that is try to do a pitch not just for 1 minute or 3 minutes, but try to actually do that for 10 minutes or 30 minutes and see if you can keep the audience engaged. I see some people sleeping already in the back, so I'm clearly failing on that. No, kidding. So it's really practice that and see if you can keep a dialogue with the audience on whatever it is that you're building. When there's a question, that's not really part of that slide but if there's a question, make sure you give a straightforward answer to that question, and not like a whole story on why you've done this and that. Now, when you start fundraising, you'll need to have a couple of things ready, because what you don't want is starting your fundraising process and then you'll get a request from a VC that says, "Ooh, send me your pitch deck." Or send me your model, and then you'll get back to him in 2 weeks' time because you still actually need to do those materials. So when that starting line has come, I'm going out fundraising, you need to have your materials ready. The one pager, which is just a summary of what you do, which is great for email introductions, and a lot of VCs don't have time to go through 10, 20-page pitch decks or investor decks, so that one page is often enough to gauge interest and to get that meeting that you want to then tell a bit more about your business. What to include in the perfect pitch deck. And I'm not going to go into too much detail, but this is there isn't really a prescriptive way to do a pitch deck. But here's what we thought are a couple of slides that should be included in kind of every pitch deck. And the first thing is obviously the problem that you're solving and your solution, because if there's no problem and if there's no solution, then customers don't really care. One point where I see a lot of crazy numbers is the market. Just to repeat the way we look at market or total addressable market sizes. If you have 100% market share, then that equals to your revenue that you get when you have 100% market share. So really not, I'm building an app, therefore my market size is the 5 trillion that the apps are generating. But if I get 100% of all the golfers and I'm doing a golfing app, and my app sells for £1, I have like the £1 billion kind of revenue. And so that's how we think about total addressable market size. I speak about competition. Don't neglect the competition, because it's the first thing a VC will ask is, hey, who's your competitors? So it doesn't make sense to neglect the slide or put it, hide it somewhere in the appendix. Put it up front. Speak about the competition. Obviously, speak about why you're better than the competition, and it will be to your benefit. And just one point on the team. I think when you speak about the team, the one thing that we would look for is, hey, why is this the team that's going to make this a really big business? Yeah, I mean, what kind of expertise do you bring? Do you have like certain passion, or why is this the class A team that's going to make this into a $1 billion business or into a really, really big business? A couple of pitfalls or mistakes we see founders do overall on the whole fundraising process, and I'm going to go through them, and I know Sia's going to pick up a couple of those when we talk about timeline. The first thing is starting too late. Fundraising is an extremely painful and lengthy process. It can take up to 6 months, and we typically advise our founders to start fundraising at least 6 months before you run out of cash. So when you don't factor in enough time, it might be that that you're not going to make it. Not speaking to enough VCs. Bear in mind, you'll get a lot of rejections. So the more VCs you include in your funnel, the higher your chance that you'll end up with a term sheet at the end of your fundraising process. Not raising enough. A lot of people are underestimating how much money they need. Typically, we'll say you need to raise to have run rate of around 18 months. Maybe you're going to pick that up again, but the 18 months is really like a timeline where you say, okay, given you need 6 months to raise, that additional 12 months that you have helps you to build enough tractions to raise your next round or convince VCs to then give you even more money. Give away too much equity too early. I'm just going to grab a glass of water here. So typically would say dilution of around 20 to 25% is kind of standard. On each round, it gets a little bit less with further rounds, but for those first rounds, the 25% dilution is, I think, quite a good benchmark. Overestimating your chances of success goes a little bit along with the other points I mentioned. Include as many VCs and as many people in your round as possible. Don't take a friend as a lawyer that does family law or helps with random litigations, but actually take a lawyer that is experienced with the venture capital scene and the startup scene, because it will help a lot when it comes to negotiating term sheets and cap tables and things like that. And so keep pushing back your timeline. I think you'll speak about that in a second. Not disclosing phony issues up front, super, super important. I think this is extreme. Yeah, it's very similar to the public markets, right? I mean, if you have bad news, if you have something that the investor should know about, disclose this early on, because you'll build trust with that. And there's always there's always an issue somewhere where you think, I could have had more traction here, or my product could have been further developed, or whatever it is. Disclose it, and you'll actually win brownie points the sooner you do that. And finally, given that fundraising is such a painful process, don't stop running your business while you're out raising. So in an ideal world, the CEO goes out raising, and the team keeps on working. And then when the CEO comes back, he does his emails at night. And that's why when you see founders that are in full fundraising pitch mode, they have very, very dark rings underneath their eyes. It's because it's a painful process. And on that note, I'm actually going to hand over to you, Sia.
Thanks a lot, Rick. So we had a bit of an overview of what are the benefits to actually take VC money. We also discussed some of the stuff that you need to keep in mind when you go out there for fundraising. So we will now try to go one level deeper and look actually at how a round of fundraising looks like. So DocSend, US company, shared some interesting stats around fundraising rounds. And so that is a bit biased towards the US. But you can see that in average for a seed round, founders will have spoken to close to 60 investors. They will have taken around 40 meetings, and usually they take around 3 to 4 months to actually close that round. So probably, given the fact that the overall funding environment in Europe is still like less favorable than in the US, you could actually think that it will take even slightly longer than that 3-4 months. So I think Rick already mentioned it, but even the best founders are going from rejections to rejections when they are actually fundraising. So Brian Chesky, the founder of Airbnb, pretty recently published that blog post, which is a pretty funny one, where he's sharing the rejection emails he got from some of the best VCs in the Valley when he was raising $150K for Airbnb at a valuation of around $1.5 million at that time. Knowing that the company is now worth around $25 billion, I'm pretty sure those investors are regretting their decision, but that's like the kind of like rules of investing, and even the best investors are passing sometimes on great businesses. And as a founder, you shouldn't take those rejections too personally. I mean, that's like part of the fundraising process. So what is absolutely crucial when you start to think about fundraising is that you have a clear start and finish line for your fundraising. And we are now like speaking really about like the active fundraising period where you're out there meeting investors and trying to get to that term sheet. Why you need that clear starting and finish line? It's because you want to create FOMO. FOMO is this fear of missing out, and basically you want investors to fight to get in your round, You want people to hear about your company, that the investor get referrals from other entrepreneurs, from other investors, that maybe they even hear about you, that you won that prize, that they see an article about you in the press, and that will create this kind of FOMO. And the reason why you need a clear timeline for your fundraising is that if you manage to actually schedule all your investor meeting in a short amount of time, keep in mind that the investor scene is actually a pretty small one, and most of those investors know each other, and if they know that you're speaking with some other funds, etc., you might create this dynamic where they all know that there is some time pressure there, and there are more chances that you will manage in a smaller amount of time to actually close that round. So if we look a bit at the fundraising process. So you can think of the fundraising as 3 phases, You have the preparation phase. I think Rick already gave some of the recommendations there. So obviously get the story right. You want to be on top of your numbers, know all the metrics that are related to the business. You want to also rehearse, obviously, your pitch. And just prepare all the material you need for the actual fundraising. So that's something that you want to start early on, and you really need actually weeks and months to really make sure you get the story really right for when you start actively chatting with investors. So then there is this execution phase. So that's really the period when you will be out there meeting the VCs. And you will get those meetings, and the goal there is to get that term sheet, And from there on, there is the closing phase. So if we look a bit closer at that timeline, especially here, it's really having a look at the execution phase and that closing phase. So from the time when you will start, to just schedule those meetings, and you will probably start meeting the associate in the funds, you will have already lost probably 1 to 2 or 3 weeks until you have met the associate, you got that first call or first meeting with the VCs. Then you will want to have the associate actually escalating that to his partners. So you want really to make his life easy, that's a phase of kind of commercial due diligence from the investor side, and you really want to provide all the material that the associate will need to kind of really build a case for investing in your company. So that's a pretty important phase. And then hopefully, if everything goes well, you will get some partners meeting. And it's during those meetings that the investors will take the decision to invest in your company or not. And from there on, so hopefully 1 or 2 weeks after, you get that term sheet, and then it's not yet done. There is this closing period, this closing phase that comes where it's like really about the legal due diligence. So if in the preparation and execution phase, it's really the founder, I would say, who is in the driving seat. In the closing phase, is actually rather the investor. But again, you want to try to make the life of the investor as easy as possible so that hopefully you can get that money wired to your account ASAP. And how you can do that is really, again, by having your data room ready where you have all the docs that the investor will need to go through the legal due diligence. Because usually, if you think about that process, the two phases where the most time is wasted, it's between the first meeting with the associate and the follow-up meetings. So that's sometimes because the founders are just not that reactive, not actually having all the material ready for the investors. On the other side also, obviously, I mean, remember that at every time you're speaking with a VC, you're probably competing with 100 other companies. I mean, I think there's been a few blog posts written about the fact that most tier 1 VCs are really investing in the top 1%. So it's really about also you being reactive, making the life of the investor easy. And then the other phase where a lot of time is wasted is in that closing phase. So hopefully that gives a bit of an overview of how to raise a round. So we wanted to finish this session with just a kind of overview of the funding environment in Europe at the moment. So over the past years, we had more and more unicorns being built out of Europe. We have 40 unicorns at the moment out of Europe. You know, it started in the early 2000s with the Zoopla and also companies like Skype. And now, just in the past 12 months, you can see that there's been over 10 new unicorns coming out of Europe. So that's obviously great news for the continent. And UK is leading on this, but you can see that there are unicorns coming from a lot of different regions of Europe. And this has also actually an impact on the fundraising. Just looking at those unicorns, something that is pretty interesting is that even if we have more and more of them, if you look at that and you compare it to the US, just the cumulative value of the unicorns out of the UK doesn't even reach the current valuation of Uber, that is, I think, at the moment around $50 billion. So we still have some way to go to actually get to the same level as the US. But so what's the impact of having more unicorns for the actual fundraising? So the thing is that with those founders being successful, a lot of them are turning angel investors or even raising their own VC funds. So as you can see, over the past few years, we had more and more founders turned angel or founders turned VC who are actually leading rounds in European startups. I mean, at Seedcamp, we've been seeing that directly. One of the two co-founders of Seedcamp, Saul Klein, was in the early team of Skype. He was also founder of LoveFilm. That wasn't a unicorn, but still got acquired for $200 million by Amazon. And also one of our biggest success, Tavet, the founder of TransferWise. He was before the founder of, he was not the founder, sorry, but he was employee number 1 at Skype also. And he's now actually also angel investing. So there's been also a lot of new funds being created during the past 3-4 years. Obviously, that's great. That's a lot of capital coming in for startups in Europe. And as you can see, in the past few years, we've had like a great increase in the number of rounds being closed in Europe and also in the total volume of funding going to European companies. Interestingly, if you look at 2015, you can see that the value, the amount being invested is actually raising a lot, but the number of rounds, we were probably not managed to actually reach the same level as 2014. So that can be an indication that we now have more money going in the later stage rounds, actually. So we have a more concentrated number of deals being done on larger rounds that are in the later stages of the companies. So we spoke a bit about the increase in capital being available for founders. What about the valuations? So the valuations in Europe, but also globally, are at the moment going up and up to a level where more and more investors are a bit worried that the market might heat up a bit too much. And what is the reason for that? So in the early stage, this is driven partly by the initiatives like SEIS that bring more and more angel money in the early stage. So people who are usually not used to invest in startups who, because of those tax relief and other benefits, are deciding to invest in startups, but also because of crowdfunding. So crowdfunding is a pretty new phenomenon, but it has clearly an impact on the valuation of early stage companies, because on most crowdfunding platforms, the nice thing for the founders is that they are the one actually deciding on the valuation of the company. So we usually see from companies that have raised the previous round from crowdfunding, valuation that are actually slightly higher than what you would expect. In the later stage rounds, there is a really big increase in valuation, and this comes from non-traditional VC money being invested there. So you have more and more family offices and, even more importantly, corporates that are deciding to invest in startups. So that's really driving the valuations up. And so finally, as we saw, I mean, it's probably the best time ever as a founder out of Europe to raise money, but there is still a lot to catch up compared to the US. If you look at those numbers, you can see that actually, we have 3 times more unicorns coming out of the US, but that the VC money having been raised in the US is still 5.4 times higher. And interestingly, also on the round size, what we call here a seed round is actually probably closer to a pre-seed round in the US. What we call a Series A round is actually just like almost the same size as an average seed round in the US. So there's still quite a lot to catch up. So that was it, guys. So before that we move to the Q&A, if you want to actually look closer at fundraising, I would recommend you to download the fundraising field guide. It's been written by one of the Seedcamp partner, Carlos Espinal, and it's available for free online. It's a great book to really go into the tactics of fundraising. And that's it. Thanks a lot. And now, open to the question.
I was going to show our Twitter handles as well. Maybe we do that. Yeah.
Great. Are there any questions for Ricardo or Sia? Yep.
We'll do that in the end.
Thanks very much for that, guys. My question's around what counts as traction, and I just wondered if you could give us a couple of examples of what traction has looked like for some of the companies you've taken on for sort of a pre-seed round at Seedcamp.
Yeah, so good question. Very difficult to answer because it really depends on your business model, right? In a consumer business, traction is a lot more important, say, generally than in a, say, B2B type business. But in pre-seed, for Seedcamp, for us, more important than traction is actually the quality of the team as a selection criteria. When it comes to a later funding round, like a seed or a Series A, traction obviously plays an important role. I don't know if that answers your question, but yeah.
Quite basically, I never got the definition of what a unicorn actually is.
Do you want to go for that?
And also the LTM editions, which was on the same slide.
Sorry, and also?
And also the LTM editions, which were on
last 12 months.
Last 12 months, okay.
Yeah,
okay.
And unicorns is just the word that's probably overused now to describe companies that have a valuation that is above $1 billion.
And then you have the decathlons.
Yeah, now you have a lot of new terms. I think decacorns for the ones above 10 billion.
Yeah.
I saw dragons the other day. I mean, we love mythological creatures in VCs.
Thanks, guys. You didn't say too much about crowdfunding. Is that something that Seedcamp doesn't get involved with? And is there anything more that you can tell us who are looking at less than 250,000?
So crowdfunding can be great. And so we, at different stages, we definitely advise our companies to consider crowdfunding. eMove, which is a business that we invested in 2 years ago in the property tech space that helps you, sell your house online. They raised up to 2 million via Crowdcube literally a month ago. And they did that within, I think, 3 or 4 weeks. So you can see that crowdfunding can be, a very effective way to raise money. There is pros and cons that you just need to be aware of. Obviously, you need to think of some of the points that we actually discussed here, which are, do you want to have value-add investors or do you want to just have the money? Often crowdfunding helps when you are doing a consumer business because then, the marketing campaign that comes alongside the crowdfunding, helps you also push out your product. Does this crowdfunding platform, does it come in form of a syndicate, or are you going to have like 200 or 500 people on your cap table? All those kind of questions are things we definitely discuss, but we are very open and by all means, crowdfunding is something we advise our founders to consider.
Yeah, I think 2-3 years ago, you kind of had a negative bias from VC investors towards crowdfunding, and this has really evolved now. You can see companies that are backed by index ventures that are raising rounds, like Just Spark did on crowdfunding platforms, and I think this is really evolving. And from our side, we are really keen to back companies that already raised through crowdfunding, or even encourage some of the companies we've backed to go raise further money on crowdfunding platforms.
We've got time for a couple more questions. If anybody has anything here. Oh, yeah.
What do you mean with the? Thanks. What do you mean with the company that you back? Like, are you? I'm just missing the point. What your company does and what do you do? So, are you investor yourself, or do you help company in managing their investor? Or I'm just missing the point.
So we invest in businesses.
Okay, so you.
When we say back, then those are businesses.
So you invest, so you have your money, or do you need to go to someone else and ask for money to invest in other company?
No, these are businesses we back and where we are shareholders.
Okay, thanks.
Any others here? Yep.
It's more of a sort of follow-up question on, it was really great presentation, thanks a lot, that was very helpful. You provided the link for the book to download about fundraising. Some of the slides were very detailed and very interesting, like the pitch deck, what should be in there. Is there any way to sort of get that information, follow up?
Sure. So actually, I'm going to flip very quickly through here. I don't know how quickly I can do that. Oops.
So we will actually share the slides.
Yeah, so anybody who wants the slides, just let me know and I can share that with you. I know I've been doing that with quite a few people anyway.
So I was going to suggest you have our Twitter handles here at the bottom, and we're just going to upload those to Twitter.
Yeah,
upload a link.
Upload them.
So feel free to follow us and see more smart, good-looking selfies. No, jokes aside. We'll upload it to Twitter, and all the slides are available. And also, if you're looking to raise money or apply to Seedcamp, then by all means, I think tweeting is a good way to get in touch, or just grab us outside. But always reach out. And we love talking to founders, so.
Okay, any more questions here? in this? No? Well, Rick and Sia are both, like they said, they're going to stay around now. So they're going to be here during the networking. So if you want to kind of get any more advice from them or have any other questions, please do just grab them over drinks. And otherwise, just please join me in thanking Rick and Sia. Thank you very much.